Good day, everybody. My name is Don Gray. We're here today to talk to Johannes Maria from Destinata Capital, and he's going to take us through the Section 12J investment program. As most of you know already, that there is 2 months to go before the government puts it back on the shelf. The question that I think maybe most of us know about, but just make sure we do, what is a Section 12J investment program?
Okay, so it's something that was brought in by SARS in 2009 already, and it came off the back of similar incentives that was done in the UK, Canada and Australia that were very effective. And essentially it's an incentive to get a country's taxpayers to invest in its own economy, and in our case specifically the SME economy, because that's the one that creates the most jobs, for example. So in order to incentivize us as the taxpayers, they've given us a 100% tax break on these investments, which is extremely powerful.
Very, very good.
I think the best way to explain it is, let's assume I've got an individual taxpayer and he falls in the top tax bracket of 45%. If that taxpayer would invest R1 million into something stock standard that's not tax deductible, something like a call account or maybe a share portfolio on the JSE, on that million, he's still going to be paying 450,000 rands worth of tax. So it's essentially after tax money that he's investing. Whereas an investor that invests into a tax deductible vehicle, something like a Section 12J investment, he would get R1 million tax deduction, which would mean he would save 450,000 rand worth of taxes by taking a different avenue than the first investor.
That's compelling, isn't it?
Well, for me, definitely, yes.
And for your clients.
Yes, definitely so.
Certainly for the man in the street. But we've got 2 months left. So there's a measure of urgency if someone wants to react, because after June, it's finished.
Correct.
So you run Destinata Capital. What sets you apart as Destinata Capital versus other venture capital companies?
We've taken a view to make it more accessible to the average South African. So typically what the Companies Act requires for an investment of this sort, it requires a minimum R1 million investment per pop, basically. And what we've done is we've registered ourselves as a public company, and that allows us to register prospectuses. Now, a prospectus is a document that goes through a whole process with the CIPC, and they check it and so on. And when the prospectus is registered, that removes the Companies Act requirement of R1 million minimum investment. So we can take investments down to, well, we can take investments down to R1 if we would so choose, but we take down to 100,000 rand.
So you got me a bit concerned there a moment ago by saying, well, you know, it can be R1 million. But what about the fellows or the folks who can put in 100,000 rand? They can do this comfortably now, but they've got 2 months to do it.
Yes, absolutely.
The government recently introduced the sunshine clause. Maybe it should be the sunset clause. But how will that affect the current and future investors who are in Section 12J programs? How will it affect them?
So the sunset clause date is 30 June 2021, and that ties in with your comment as well that we essentially have 2 months left. Practically speaking, what the effect of that is, existing capital, so investors who've already taken part, it's got no effect on the legal side for them. The tax deduction that they obtained stands, and the funds still need to be managed in line with the Section 12J legislation. So if you're in basically before 30 June, that stands. If you invest after 30 June 2021, what that would mean is that you can still invest, you're welcome to, but then it's essentially in a private equity firm because you're not going to get the tax deduction after that. So the deal date is extremely important. Typically, investors would normally wait until the last day of the tax year to make the investment because you qualify in the tax year that you make the investment, so typically 28 Feb. But for this year now, we are 4 months into the tax year when we get to the end of June, because it starts in March, so March, April, May, June. So they just need to be aware of that fact and act a little bit sooner this year.
All right. Now, one of the things that I guess some people will be asking is the Section 12J, how does it differ from other investments, such as retirement annuities?
Yeah, that's actually a very good question to put it in perspective, because a retirement annuity, that's typically, you probably would know yourself, just before the end of the tax year, your financial advisor would normally ring you up and say, look, I think it's time to consider bumping up your retirement annuity contribution for the year, because it is also tax deductible. So the key differentiating points here between S12J and the retirement annuities, they're both tax deductible, 100% tax deductible. The key difference is your limits. So for Section 12J, an individual can invest up to 2.5 million rand per annum. A company can do up to 5 million rand per annum. A trust can also do up to 2.5 million. Whereas with a retirement annuity, you're limited to 350,000 rand per annum. Or, if that's a lower number, 27.5% of your taxable income. So if your taxable income is something like 500,000 rand, for example, you would only be able to do an investment, or a tax-deductible investment in an area of about 112,000 rand. Okay. So your limits are much higher. That's the one big difference. And the second big difference is the investment time period. So typically, for S12J, you need to remain in for at least 5 years, whereas with the retirement annuity, you exit basically upon retirement only, so age 55.
Just one question that comes to mind. Who can invest in this Section 12J program?
Any South African taxpayer. So individuals, whether you are a salaried employee that pays pay as you earn, whether you are a provisional taxpayer, companies, trusts.
You mentioned a South African taxpayer, but if I'm, for example, there's a fellow who lives here who's British, and he's registered in Britain for tax, but he lives in South Africa permanently, is that possible?
Yes, it's going to depend a bit on your personal situation, because our tax legislation states that residents are taxed on their worldwide income and non-residents are taxed on their South African source income. So in your case, for example, if you have South African taxable income, you would be able to get that tax benefit. Okay. And otherwise, let's assume it's somebody not earning any taxable income from South Africa. Nothing's stopping you from investing, but you're not going to get that tax benefit. Yeah.
So frankly, it's South African taxable income that is the qualifier.
Correct.
Johannes Maria, thank you very much.
No, it's great. Thanks.
Thank you, sir, for giving us that information.